Okay, hello, good morning. Today is October the 8th, and we are going to continue on our HUD housing counseling. We are on session 4.1, so that's chapter 4, like module 1. Uh, and we are at Orange Community, but we wanted to go ahead and get this out the way since we are going to have to leave the facility on the side. We're on the home inspector. It says, now that you know about mortgage regulations and disclosure, let's move on to step 7, getting a home inspection. And this is their step 7, getting a home inspection. Go ahead and click next here. Oh, let me go back. It wasn't next. Yeah, decline that. I know someone called me from Virginia. Okay. And the final rule for housing counseling certificate mandates that all home ownership counseling clients receive required home inspection information. These pamphlets, including For Your Protection, Get a Home Inspection, and 10 Questions to Ask a Home Inspector, are available in the resources section in both English and Spanish. Here are some questions your clients may ask in pre-counseling sessions about what to expect when working with a home inspector. Let's take a look at some sample housing counselor responses. Am I required to hire a home inspector? This step is optional, but is very strongly recommended. When considering whom to hire, it is helpful to interview several inspectors and select one that is properly qualified and licensed. And as a realtor, I would already have probably a list of inspectors for my clients. And I want to put this in there that this inspection time is during the optional period where you will actually have the right to enter back out of an actual contract if that is what you wanted to do and get your earnest money back. Okay, put it that way. Next question says, what does the home inspection do? A qualified inspector carefully examines the physical condition of the home, identifies items in need of repair or replacement, and estimates the remaining life of various home components. Okay, so it estimates the end life, what you can expect. And the last bullet point question here, arrow mark, says, what can I do if the inspector identifies problems? It says a home inspection contingency, this is usually the option period in the Texas real estate contract, can be included in the offer contract that outlines a buyer's options in the case that the home inspector identifies major issues during inspection. The contingency typically gives the buyer the right to discontinue the purchasing process or require the seller to put money in an escrow account to cover repair costs. You can get them to, usually we can negotiate this over the repairs, especially if it's a lender required repair. This is a good negotiating point. Okay, I don't want to close that out. Okay, now we're going on to the next one. And this was step 7, the home inspection. Selecting an insurance agent and policy. Most lenders require clients to purchase homeowners insurance in order to avoid a large financial loss if the property significantly damaged. We're going to pause that. Okay. Most lenders require clients to purchase homeowner insurance in order to avoid a large financial loss if the property is significantly damaged or destroyed. Whether or not it is required, it is advisable for most homeowners to have insurance because it offers a financial security. So the next step in the home buying process is purchasing homeowners insurance. In order to prepare clients to work with an insurance agent to carry out this step, housing counselors can offer advice to clients about selecting an insurance agent and policy, explain basic types of homeowner insurance coverage, and answer questions related to earthquake insurance and flood insurance. Here are some advice you can offer to clients about selecting an insurance agent and policy. Shop around to compare rates with similar products considered the least expensive. Ask insurance agents about discounts offered for homes with specific safety features or for other reasons. Insure your home rather than the land it is on, because after a disaster, the land will still be there. Recognize that the cost of homeowner insurance may be included in your monthly mortgage payment. Do your research up front rather than waiting until a disaster hits to find out whether or not you have the right type of coverage. I want to go back a little bit. A little bit too fast. Okay, that's one of the things it says. Do your research up front rather than waiting until a disaster hits. And the last one is select insurance coverage that matches your lifestyle, the home's age and condition, and the home's geographic location. So we don't need earthquake, but we may need flood out here. Before we take a closer look at different types of coverage offered as part of homeowners insurance, let's take a moment for a knowledge check. We're going to go ahead and walk through these. Check my knowledge. Okay, all of the following would be a good idea for clients to do during the process of obtaining financing, except purchase the same homeowner's insurance policy as the previous homeowner, do research up front to get the right type and amount of insurance, insure the home and the property, shop around and get the best rates. I don't think we say anything about purchase the same homeowners. We're going to click that. We don't want you to purchase the same. Submit. Correct. A new homeowner may have a different lifestyle than the previous homeowner and may need different insurance coverage. Okay. The next one. And we're on page 34 out of 41, so we should be done with this one in a few more minutes. Types of homeowner insurance coverage. Let's look at a little closer at types of homeowner insurance coverage. Structure coverage, loss of use coverage, contents coverage, medical payment coverage, personal liability coverage, and add-ons. Minimum required insurance coverage varies by lender. Not all of the above mentioned types of coverage will be required for all homeowners to purchase. And we're going to go ahead and click the types of insurance. Okay. Structure coverage. One moment. Structure coverage reimburses policyholders for repairs needed for a building structure when it is damaged by certain perils. For example, if a falling branch damages the roof during a snowstorm, the homeowners are entitled to receive funds from their insurer to repair the roof. Clients who purchase a condominium unit or other housing with an HOA or a community association are encouraged to review their association's master insurance policy with a housing counselor or the insurance agent before purchasing their own structure coverage. Oftentimes, the common components of a building, including the roof, hallways, and garage, if applicable, are insured with funds paid jointly by all residents of the condominium. Condo owners should ensure that they are protected from any gaps in coverage between the master policy and their personal policy. Example, the master policy requires a large deductible for any shared costs among residents. Loss of use coverage. Loss of use coverage provides funding for housing and food expenses of policyholders who temporarily cannot live in their home when it is damaged or destroyed by certain perils. For example, if part of a home is destroyed in a fire, the residents may live in a hotel while the home is being repaired and may claim funds from their insurer for the hotel and food expenses. Contents coverage. Contents coverage reimburses policyholders for personal property, and personal property says while homeowner policies cover most personal property, certain valuable items such as expensive jewelry, artwork, or silverware may have limited coverage. Clients with valuable family heirlooms or other expensive items may want to consider a floater, a separate policy that provides insurance for specific valuables. Okay, so check that personal property out, and if it's destroyed by the certain perils as well. Depending on the policy, clothing, furniture, household items, musical instruments, laptops, and other items can be reimbursed. For example, if a flat screen television and laptop are stolen from a home, insurers may reimburse homeowners for the value of the stolen items. It is standard for homeowner policies to cover contents only for actual cash value rather than for the replacement cost. Actual cash value policies consider depreciation and reimburse you for what you would be able to sell the item for at the time it was damaged or destroyed. Replacement cost policies, on the other hand, will pay you for the amount that it would cost to replace the item with a new item of the same variety. Oftentimes, clients have the option to pay a higher premium to purchase a replacement cost policy. Here's an example that demonstrates why that may be a worthwhile decision. A client's father gave her 10-year-old daughter refrigerator when he moved into her home. The refrigerator was destroyed that same year in a house fire. With an actual cash value policy, she would have received $50 for her refrigerator and would have spent $16.50 out of pocket to replace it with a new one that cost $1,700. However, if she had a replacement cost policy, she may have received the entire $1,700 from her insurer. Now, the replacement cost will maybe cost you. Do you want to do that? Medical payment coverage. Medical payment coverage reimburses policyholders for a certain portion of the medical bills incurred when someone becomes injured on a policyholder's property and chooses not to sue. In order for this policy to apply, the individual injured cannot be a resident of the insured home. For example, if a guest trips over a stump and must get stitches, the homeowner's insurer would pay the medical bill up to the amount of coverage on the policy. So this is what people fall on someone's property, and they'll only pay for the bills. Then you have the personal liability coverage right here. You have the separate medical and separate personal. Personal liability coverage provides funding for a defense lawyer or legal judgment if a policyholder is sued for a negligent act that led to an injury of a guest. For example, if a person is injured from tripping over clutter in the home that is not his or her own, he or she might choose to sue the homeowner for negligence. So if you're suing them, then you will use the personal liability coverage. And if you're not going to sue them, they will give you the medical payment coverage. And then you have the add-ons to the insurance policies. And don't they love to add things onto our policies? Okay. Add-ons. Add-ons are often referred to as riders and endorsements. Common add-ons include earthquake or flood insurance. Typical homeowners insurance policies do not cover damage from earthquakes or floods, so clients who live in areas with high risk for either of these disasters might consider purchasing additional coverage. Business merchandise coverage. Those who have home businesses or have products in their home which they sell online might consider protecting the value of their merchandise through this coverage. And you have the incidental business liability. This coverage is particularly beneficial for those with a small home business which brings customers to the home, such as the babysitting business. It helps protect against liability claims related to the business. While these are the most common add-ons, others do exist. Housing counselors can best advise their clients if they first review these types of insurance recommended for their region, particularly our region with the floods. Okay, 35 or 41. Earthquake insurance counselors may suggest that clients living in regions susceptible to earthquakes purchase an earthquake insurance add-on. Let's review some common questions that clients may have about earthquake insurance and simple answers that counselors can provide. Questions and answers about earthquake insurance. Who do you recommend gets it? There are no federal or state regulations that require homeowners to get earthquake insurance. However, if your home is completely destroyed in an earthquake, you will most likely need to pay to rent or buy another home while you continue to pay the mortgage on your original home. This could severely affect your financial security. So I recommend that you evaluate the likelihood of earthquakes in your area using seismic hazard maps created by the U.S. Geological Survey and purchase earthquake insurance if your home is in a high-risk region. What affects the cost? The policy price may increase if your home is a wood frame structure, an older building that is not designed to withstand earthquakes, a high-risk area for earthquakes. Although earthquake insurance may be expensive and typically requires a very high deductible, often up to $4,000. Wow. If your home is completely destroyed, the insurer will pay for it to be rebuilt and the investment will be well worth it. And I won't agree with that. Okay, what's included? Was excluded. Every policy will specify the damages that it won't cover, in addition to specifying those it will cover. Okay, so it's essential to read the policy thoroughly. For example, when an earthquake causes a flood, whether a tidal wave, tsunami, or otherwise, the damage caused by the flood may not be covered. And that's one thing we have the hurricanes out here and the flooding. So what is included is why they have the windstorm and the flood insurance out here. Generally speaking, earthquake insurance covers damages to the home or its contents caused by an earthquake. For example, walls, appliances, and plumbing may be repaired or replaced. Okay. Counselors will also, this is on flood insurance. This is my thing here because I'm in the flood area. I don't know why I moved that. I don't know. Yeah, this is my area. Flood insurance. Counselors will also recommend that clients consider flood insurance to protect their homes. Let me go back. I didn't read that. Because this is our area right here, living in there. We just had Storm Imelda, last week, 2 weeks ago. Like 3 weeks this week. I don't know why I did that. Anyway, I'm looking for the red light. Let me pause it. It says, depending on the property location, certain clients may want to or may be required to add flood insurance to their homeowners insurance packages. Here are some simple ways that housing counselors can answer frequently asked questions about flood insurance. FAQs. Let's go ahead and go now. Okay, it says what's included. When water that floods a home comes from outside your home, this insurance will cover damage it causes. You can choose whether to purchase both structural and personal property coverage as part of the policy. Typically, there will be a cap to the amount the insurers will reimburse for damage. Example, $250,000 for structural damage and $100,000 for personal property damage. Who do you recommend gets it? If you live in an area designated as a high-risk flood zone by the Federal Emergency Management Agency or FEMA, you are required to buy flood insurance. To determine the risk level in your area, take the one-step flood risk profile on the National Insurance Flood Program or NFIP website. I'm going to go ahead and click that link. Okay, wait on it to open. It says you are not mandated by law to purchase flood insurance if your home is not in a high-risk flood zone or designated by FEMA. However, on data showing that individuals who do not live in high-risk areas submit a quarter of NFIP claims and receive one-third of disaster assistance for flooding, FEMA strongly recommends flood insurance for everyone. Furthermore, lenders occasionally require borrowers outside of high-risk areas to purchase flood insurance. According to NFIP, homes and businesses with mortgages from federally regulated or insured lenders in high-risk flood areas are required to have flood insurance. While flood insurance is not federally required if you live in a moderate to low-risk flood area, it is still available and strongly recommended. Additionally, a lender may require flood insurance even if the home is not in a high-risk area. What's excluded? When the water that causes flooding in your home comes from inside the home, the damage it caused will not be covered. Damage to pools and cars is also typically excluded. It is important to review your policy closely and take note of other exclusions. And what affects the cost? The location of your home will be the biggest factor in determining the cost of your insurance. While the average policy costs $650 a year, the premium for homes in high-risk areas can be up to several $1,000s per year, and that may be around the Bolivar Peninsula area, Galveston, and things like that. I recommend to most home buyers that they research the cost of flood insurance before closing on a home, because the added expense could make a home unaffordable. Okay, let's take a moment for knowledge check to review what we've learned on flood insurance, about homeowners insurance. Okay, getting this housing training, home training done. I'm trained to train you. Okay, let's see. We're going to connect the dots here. Personal liability coverage. A family must rent an apartment for 1 month while their home is being repaired after a windstorm. After a windstorm. Loss of use coverage. After a home is being repaired. Yes, they have to rent a hotel. And this is apartment. And the next one says a gutter system is destroyed in a hailstorm and must be repaired. A gutter system and must be repaired. There will be structural coverage. A guest gets carbon monoxide poisoning from a home that has a gas leak and no carbon monoxide detector and sues the homeowner. Sues personal liability coverage because it's going to sue them. Okay, a wall of a home collapses during an earthquake and must be rebuilt. Earthquake coverage. And the last one says a guest at a home slips on a wet floor and breaks a bone. He does not sue the homeowner. Medical payment coverage. And submit. You correct. You selected the correct answer. Very good. We have about 2 or 3 more here. Let's finish this module out. Knowledge check. It says during a pre-purchase counseling session, a client mentions that he wants to make an offer on a home situated near a stream that historically floods in heavy rainstorms. Which statement would be an appropriate response for a housing counselor to give him? It is important that you get medical payment coverage if you are going to live near a stream. That's the first one. I recommend that you purchase homeowners insurance because it will cover damage done to your home if flooded by the water from the nearby stream. It's the second. And before you close on the home, it may be wise to factor the cost of flood insurance. Since your home will be next to a stream, flood insurance could be critical. However, the added annual expense of flood insurance may make the home an unaffordable option for you. And the last one, I would advise you to purchase earthquake insurance. So we know it's not medical or earthquake. And okay, so it's between the two. It says I recommend you purchase homeowners insurance because it will cover the damage done to your home if flooded. No, it cannot be. So before you close on that home, you ready to make an offer. It may be wise to factor in that cost. Okay, as it submit, you want to factor in that cost. Correct. With an average policy cost $650 a year, the premium for homes in the high-risk areas can be up to several $1,000s annually. Remember that factor. The closing agent. The last home buying team member we'll discuss in this module is the closing agent. The closing agent collaborates with a real estate agent or broker during the final step in the property purchase. You can help clients prepare for this step by answering two common questions. What happens at the closing appointment? The title will officially be changed to your name and you will receive the keys to your home. There is a large amount of paperwork involved in the process as well. What can I do to prepare for closing? There are three important things to do in preparation for closing. 1. Ensure that you have all the funds for closing costs and that they are readily available. They are typically due at this time. 2. Gather all the paperwork you have received during the home buying process. It will be helpful to have this paperwork at the closing appointment. 3. Review the agreements of the sale before closing to ensure it protects your interest. You can consult with the real estate attorney if you need help, or you can review the documents with the housing counsel to better understand them. If you do not have an attorney or counsel review the agreement or sale before closing, it may still be beneficial to do so after closing. Okay, we'll take a moment now for two final checks about the home inspection and the closing process. Almost done here. Which best describes the home inspection and closing process? Not all closing costs are due at closing. There is no value in having a real estate attorney or housing counsel review the agreement of sale before closing. Home inspectors estimate the value of a home and make certain it is marketable. Your clients will receive the keys and the title when they give the seller their earnest money. Not all closing costs are due at closing. Submit. Yeah, paid outside of closing. You'll see that POC. While most closing costs are due at closing, partial funds can be due at the time of application. And usually inspection wants all their money done out here. Summary in this module, very long. We have 41 pages here. We have learned how to evaluate a client's readiness to purchase a home through discussion of income, credit, savings, and homeowner responsibility. 2. Demonstrate knowledge about the process of selecting and purchasing a home, as well as the team of professionals needed. 3. Comprehend the process involved in obtaining financing, including the selection of a lender and understanding of loan products. 4. Evaluate a client's completed Uniform Residential Loan Application Form 1003 for any general deficiencies. 5. Apply knowledge of mortgage regulations and lender disclosures, including RESPA, TILA, TURD, and ECOA, to a discussion about how these laws relate to a client's specific circumstances. 6. Apply knowledge of common abusive lending practices and loan scams to help the client avoid similar situations. And 7. Explain insurance terms and concepts of at least 3 types of insurance policies to be available to identify the risk that is mitigated by each type of insurance policy. And I want to thank you all for the home training for today.